Hi, this is Bekim, and you are listening to Lending Thoughts, sponsored by Rocket Pro. Today, I'll be interviewing my friend, partner, and leader, Hash Aboulhosn, who's the president and co-founder of Rocket Mortgage Canada. And I'm really excited for this conversation because I get to talk to Hash every day, get to hear his thoughts, and he gets to hear plenty of mine, probably more than he'd like to. But for one time, I get to just be quiet, listen, ask questions, and Hash does a phenomenal job talking about himself, about the industry, and some actionable takeaways that every mortgage agent, broker, lender, I think, in Canada is going to want to hear. So take a listen in on this episode, and I hope you enjoy. Hey, Hash, thanks for coming today.
Hey, Bekim. Thanks for having me. It's a pleasure.
It's so good to talk to you. I get to speak to you every day, but today we get to speak publicly, which is awesome.
We've often thought that what we needed is more speaking together, actually. So we're
Yeah. Several hours a day is not enough. Let's put one on the record. So
we've also been talking about this for a long time. So congrats for actually getting started.
Yeah, thank you. You know, it took a year and a half to make the sign. I was just waiting. And now that we have the sign, we're good to go.
Supply chain issues, they're challenging.
Yeah, absolutely. So obviously, since we started talking about doing this to the time that we're doing it today, a lot has changed. You and I have changed, and our business has been through quite a heck of a lot. So this will be my first episode, and I get to interview you, Hash, our president and co-founder of Edison Financial, now known as Rocket Mortgage Canada. So it's pretty exciting. I've got to witness a lot take place in your life over the last 4.5 years, but what I would like to understand as a starter, and maybe you could tell our audience, is a little story about you, except let's put a time constraint on it. Can you tell us about your life in 60 seconds or less?
Yeah, sure. My pleasure. I was actually thinking that the positive of having me as your first guest is that you can only go up from here. So I think it's actually a great approach. That doesn't count against my 60 seconds for the record. So going right back, I was born in Beirut, actually, 1987, and then moved to Canada when I was about 1. Stayed here since I was in kindergarten, went back to the Middle East, Saudi Arabia and Dubai for elementary school, then back to Canada, did high school and university in Vancouver. Then moved to Toronto, started in finance on Bay Street. That was kind of my first exposure to parts of this space, and then moved over to the UK. I was in London for a bit under a year. And then I decided to kind of step off that path and go down the path of joining a VC fund, venture capital fund in Vancouver. That is what got me exposure to startups. Started chomping at the bit there after about 3 or 4 years, left to start my own business and partnered up with a good friend, a guy by the name of Alex Coney, who many people know is the founder of Lendesk. But I started a different mortgage company called Neighborhood Holdings with a third partner, Taylor Little. And then that was kind of my first exposure to the mortgage space. And then after about leading that business for about 4 or 5 years, moved over to join the executive team at Lendesk. That's when we connected with Rocket. Rocket bought Lendesk. And after about a year, started chomping at the bit again and started talking about, co-founding what became Edison Financial. Launched that business in March of 2020, followed literally days later by COVID lockdowns. So great timing.
Mm-hmm.
And then 4.5 years later, we are kind of deep into it, really finally hitting our stride, figuring things out. And I recently had a kid about 8 months ago. So that's been a big change in my life, which I'm enjoying. As I like to joke with some people, I launched another startup, this one in the biotech space. This one growing much more reliably than Edison did during COVID, but guaranteed to not make me my money back unless you become like a child star or maybe an athlete. So we'll see.
Yeah. So safe to say you've been a little busy, building a business and watching a child grow at the same time. It's been quite interesting. And much like a child, like ups and downs, right, of the industry over the last couple of years, definitely seeing some tailwinds right now with a lot of recent changes. But I actually wanted to see if you could lend us some of your thoughts in an unfiltered way as a starter on technology. We certainly have spent a lot of time trying to make sure that we're thinking about what Canadians want as it comes to technology. And we certainly learned a lot, but what are some of your thoughts on that?
I feel like every time you say, lend me your thoughts, you should have to say pun intended, given that it is the name of the podcast. Unsolicited piece of advice. I think that would be kind of funny. But yeah, something we talk a lot about. And what I would say is I think that most people, when they think about mortgage technology, they think about the piece that they can feel and touch. So what either clients are using or what mortgage professionals are using. But I think a lot of people underestimate just how complex of a transaction a mortgage is. And if you think about it, it spans kind of at a minimum 8 different business models, each with their own technology. And I think one of the reasons, as I'll talk about why I think mortgage technology hasn't advanced as fast as people would like is that all these things are interconnected and you can't advance one without another. But when I think about mortgage technology, I think about, top of funnel. So lead originators that are obviously, integral in terms of how clients engage with us. We're talking about origination, tools like Finmo, for example, underwriting, qualifying the client, pulling credit, et cetera, can also be done in Finmo or increasingly like tools like Fundmore. You got the mortgage insurers, you got title insurance companies, you've got the lawyers and the closing, you've got aggregators and investors, and you've got servicing. So that is what I think about when I think about mortgage technology. And it really is a system that works together. So I think that one of the challenges with mortgage technology is you can't just like fix one piece. And I'm probably using a lot of analogies in this conversation, as I tend to do in our day to day. But if you think about it like a car, and I'm going to compare ourselves to Tesla, not because I think, either of us are Elon Musk, but I do think it's actually a great analogy for a complex system that was disrupted. You can't just put an electric motor in a Ford Pinto and like call it an EV, right? The thing that's made Tesla's really remarkable is that they electrified everything. But even Elon really couldn't do that at first. He started putting an electric motor in the chassis of a Lotus Elise. He used the Lotus Elise chassis, the doors, a bunch of like the suspension, a bunch of stuff. And that actually made it kind of awkward. And like really the Roadster, that first car, wasn't the vision. It kind of was a proof point that it's possible so that he could get the level of investment and commitment that he needed for the much more significant build. And eventually that turned into the Model S and then the Model Y, et cetera. And I think it's actually a very good analogy to the mortgage space, which is if any entrepreneur sat there and be like, I am going to rebuild the technology for all 8 of those business models to truly deliver push button, get mortgage, they would struggle to get the investment required. And so I think what many entrepreneurs have done, ourselves included, have started off building the equivalent of the Roadster, which was typically a brokerage, because then you could effectively prove out the vision on a small scale. But once that was proven, you very quickly have to go out and do what Tesla did, which is build your gigapress, build your chassis, build your gigafactory, because without controlling the rest of the chain, you can't really drive the type of experience that you want. So like there's no amount of front end brokerage technology that you could build, no matter how great it is, that's going to change the fact that your lender requires you to have a paper signature or something like that. And so again, very similar analogy, you have to kind of move the entire chain along at once. And I think that is sort of one reason why it's very difficult. In many ways, it hasn't happened as quickly as people thought, and why a lot of the new entrants or challengers have gone down this path, starting off as a broker, then becoming a lender, and then increasingly potentially becoming a servicer, becoming an aggregator, all these different business models so that you can kind of deliver that vision of push button, get mortgage.
That's a great analogy, actually. And it actually has me wondering, Tesla built that with the future in mind of like what people wanted and how it would work, but actually forces me to ask the question then, if the perfect world is push button, get mortgage, or like a super simplified experience, is that what the consumer wants? Is that what they're ready for? If we were to spend all of our time trying to figure out a way to tie all of these technology pieces together for the broker, the lender, the insurer, the closer, right, the marketing, like all the way through the funnel, like let's just say we spent the next 2 years in a lab, picked our head up, and we're like, hey, we just created the whole one-stop shop. All you have to do is click this button. You've got your mortgage. Here you go, Canadian consumer, go get your mortgage. Is that what the world wants? Or is that something that us as, fintech technologists, et cetera, that we idealize on?
Yeah. I mean, that's actually a great question. I actually don't think it's necessarily what clients want. I think that they definitely want it to be easier, less stressful, faster. They want those things, but I think they often really like and often need and want to have the trusted advice of an advisor. But I think that you could have effectively push button, get mortgage, but with an advisor kind of holding your hand while you're doing it type thing. So, if I was to kind of go deeper onto the analogy, the difference between self-driving and just driving a Model S, like the Model S experience is great. Do I want sort of self-driving all the way from here on my road trip? That would be awesome. It's not necessarily necessary, but certainly versions of it along the way. And so I think that there's the consumer side of it, but then there's also the originator side of it, which is to say that it costs a lot of money, really, if you think about operating all 8 of those business models. And so even if the client still has the benefit of having their handheld and having great advice, the more that we can effectively make the rest of that supply chain efficient, the more effectively we can lower the cost and ultimately pass that advantage onto the consumer, really refocus our attention on the things that really matter, which is building rapport, providing quality advice and not so much on shuffling documents and emails back and forth and, moving closing dates and all that kind of jazz that people don't necessarily like.
Yeah, I think as you say that, keep going down this analogy hole as you and I tend to do, but it's actually even more akin to a Tesla in that way when you bring up the point of self-driving, which is to say that people, when they think about self-driving vehicles, often have a sense of fear associated with that. Now, you can give them all the data in the world to suggest that they're actually much safer and then, have a lower crash rate of self-driving vehicles and compared to humans driving themselves. But like people think about that and they're like, well, at least I want that piece of control. And when you think about a mortgage, the fear in a fully automated experience where the person doesn't speak to an advisor, they go out, they get their mortgage on their own, and it's basically push button, get mortgage. I think everyone's fear is that they will have made a mistake. And even in that small case where you think that you've given them all the information up front, you've given them all the disclosures, $600,000, $700,000 debt is a massive thing to sign your name on the dotted line on. And not having that crystal clear clarity and that feeling of self-control and that feeling of having an advisor, all that around the mortgage experience. I think what you're saying is that humans are going to be a part of this experience for many years to come.
Very much so. I mean, I have second thoughts on a $60 Amazon cart, let alone a $600,000 mortgage checkout.
Yeah.
I think it's
yeah. That buy now button is scary, right? You got to make sure. Yeah. So let's maybe switch it up a little bit. We've seen a lot of cool and interesting things taking place in the mortgage industry lately. I mean, I think when the interest rates started coming down, I think we started to see a lot of renewed interest from consumers across Canada, started to see web traffic going up. But then we also got some cool news from the government regarding CMHC changes, things like that. What are you seeing? What's sort of like the broader picture on the mortgage industry as you're seeing it right now?
Yeah, it is a very, very eventful time and also very exciting. I think there's like a couple of broad themes. One is definitely what I would say is the loosening of qualification restrictions. I think it's going to be a huge positive to challengers, whether that be brokers or new lenders, really reducing some of the barriers that existed and seemed frankly kind of silly and anti-competitive for clients being able to move their mortgage at renewal without the added burden of a stress test. I think the stress test is important, but like if they've already been stress tested once, whether they do it with the same lender or a different one, really, I think does not make a difference and it actually just harms competition. So I think that's been a very positive move. Increasing of the insured limit has also been a big positive. I mean, it's something we've been talking about for a very long time. It's been very much a limiter in places like Vancouver and Toronto, where even a starter home is very, very expensive. And so I think it's going to open up what I think is a great program to more first-time home buyers and again, really benefit new lenders and brokers whose bread and butter really is that insurable space. So I think that's a big positive. I also think that one thing that people have been watching really, really closely has been this question of that big renewal cliff, things that people have been really worried about. And from what I'm seeing, I think that we're going to get very lucky as a country. And I think that we are going to avoid the worst of what people had feared with that giant renewal cliff. And you see it like the average interest rate that people are paying on their mortgage debt across all existing balances is actually starting to come down for the first time, basically since 2022. And as amortizations get extended with some of these new rules, as rates come down further with rate cuts, even as people are renewing, potentially into new rates that are higher, I think overall debt service is going to come down. And so I was someone who had, for a long time, sort of worried about what this cocktail of high housing prices and high interest rates were going to do. But I think that we're going to be okay. Mind you, I think that there's some major long-term challenges around affordability that we need to solve as a country and supply. I no longer feel like that sort of acute near-term risk is there. And so the consequence of all of that is that we have seen really amazing results from our business recently. And we spent really the 2022 and 2023 refining our craft, rebuilding, and we're seeing a huge surge in interested clients, huge surge in our conversion production. And so it's actually a very interesting time. And what I would say to your listeners would be, if people are interested in learning more, if they like the idea of being in the industry, but sometimes working solo is not something they appeal to them, we offer this really fantastic environment where you're supported by a team, fantastic culture, benefits, and a way to be an incredibly successful mortgage professional without necessarily having to do things that not everyone likes, which is the actual part of building a business, generating lead flow, managing that lead flow. We kind of do that for everyone. We're just seeing one of the most rewarding things. We're seeing people have amazing success, bringing their skills, bringing their energy to us, and just being able to focus on helping clients all day. So I think the byproduct of all that is, people should just reach out if they're interested in learning more.
Yeah, that's awesome. I couldn't agree more. Actually, we're seeing a lot of positives in the business right now. And it has me thinking, there's the brokerage side of what we do here at Rocket, but there's also the lending side and some of those changes and how they benefit the lender that we have, right? An insured, insurable lender, primarily when we think about what we focus on and where monolines like us actually make their mark. And that limit going from 1 million to 1.5 million, I think is a big win for us. Can potentially speak to that a little bit. I know you're based out of Vancouver. Obviously there's, a pretty expensive housing market out there, as well as the GTA. Just what do you see when you think about that?
Well, we actually ran an analysis of our internal numbers here at Rocket, and I forget the exact stat, but when we look at the number of applications that we got, not even just like full applications, but even just like initial, inquiries, if you increase that limit on home value from 1 million to 1.5 million, I think it increased the amount of home equity that was eligible on the order of 20 to 30%. That's all of our data over the past, I think, year or so. So that includes all across Canada. So it's pretty significant, really. It's a pretty significant change in the share of business. And if you look at the insured insurable mix broadly, and this is coming just from bank data, but it used to be something like 40% of the volumes that bank originated, and today it's like 18. So that number has come way down. And with this change, I expect it to kind of rebound and go way back up, which again means for people like us that I think really the value of what we do, the quality really shines through in that insured insurable program, because that is where we can actually offer most competitive rates. On the uninsured side, going back to our analogy of the Tesla, that today is primarily funded from a balance sheet. And that means that someone else is going to build your chassis. You can build the most amazing EV, the most amazing dash, internal infotainment system, but unfortunately, one of the big five, they're providing you the chassis, and you kind of just got to make that work. And they're great partners, but those things just don't integrate very well together all the time. So if we want to go faster, more convenient, and the bank just has a different process, often because they've got a different set of regulations, those things don't work as well. So, but in the insured insurable, that's where we've got our Model S. Clients can benefit from the speed, the pricing, the convenience, all that kind of stuff, because it's fully integrated. And so I think it's going to be a huge win for us and a huge win for first-time buyers as well.
Yeah, I couldn't agree more. So with that change, a lot of agents and brokers that we talk to every day, like they're saying, like, what does that mean for my business? What do I do with that? And I always think it's nice to think about actionable takeaways. Otherwise, we're all just sitting around talking. But as you think about what actionable takeaway brokers, agents can have with, interest rates going down, tailwinds, industry regulations, right? You mentioned yourself, they're like 20 to 30% more clients that we're going to do business with are going to be eligible for insured insurable financing. That's a big, big deal, especially in some of the biggest markets of our country where those folks were highly restricted. Now, obviously, a lot of agents and brokers across the country, like they're hyper specific to their locations, and that's okay. So maybe what you say won't constitute an actionable takeaway for everybody, but if you're out there and you're an agent, you're a broker, you're seeing what's going on in the world right now, like what do you think they should do that they can improve their business with right now?
So I often get asked this question, and one thing I'm always careful to state up front is that I think that our business at Rocket Mortgage is a very different business than the one that the average mortgage broker runs. And that's because we serve, in a sense, a different client base. Like we're both really focused on client relationships, but our client relationships typically start online, whereas mortgage brokers typically start their client relationships in the community. We're centralized, and so not everything I think is relevant for both groups. But as I try to think about what is and what, from our experience, I think is relevant for most mortgage brokers, I think what's clear is that we are both focused on building client relationships. One of the primary tools that we use to do that is a CRM. We happen to use Salesforce. There are many out there. I think most brokers also use a CRM. Maybe some don't, a lot do. Where we have just seen immense value is really just learning to go deeper and deeper on that tool. I think like many of the tools that we use, whether it be the HP calculators or Excel, people generally just scratch the surface, don't necessarily spend the time to really learn the tool. And like a great example with this new regulation, I think any broker should be able to look through their database, identify every client that they talked to who actually had a purchase price that was from 1 million to 1.5 million, and they should be calling them right away, because that client's mortgage rate is now dropped quite a bit. Their down payment potentially dropped, 60 to 70% of what they thought it was going to be. Those are huge changes for people. And so I think that like this process of, continuing to invest and refine this relationship tool that you have with your clients, using it to follow up with people, follow up with your refers. All that stuff is so appropriate. And in many ways, that is a version of what we do, but on a much larger, much more sort of broad scale. I think each mortgage broker can do the same thing. And this is a really fantastic opportunity to reach out to people again and actually offer them something of tremendous value.
I couldn't agree more. You talked about just like going back to like getting very specific to people who had expected home values that they plan to purchase in the range of 1 to 1.5 million, to put like some numbers on it. They might say to themselves, like if they were talking to their mortgage agent, like I can't afford the $300,000 down payment or the $400,000 down payment. But if that agent were to pick up the phone today and say, it's actually only going to be 80,000 for the down payment or 120 instead, like let's make a plan on how we get there. It's a major differentiator for the agent, the broker, right? Because leaving consumers in the dark to go out and like figure that out for themselves, I think is probably not the best strategy. But the first thing you need to be able to do as an agent broker is actually have the information. Otherwise, how would you know? Like, did you leave notes on that client? You said like you can figure out the level of sophistication, be it a Post-it note, be it an Excel sheet, whatever it is. We built a lot of our original business model in Excel, off Excel, and then like slowly over time started to transition all that stuff to working CRMs so that we can actually have smoother ways to get in touch with our clients. But that's a really nice, I think, good takeaway, something that I think we did a really nice job from the very beginning. Even though we were not as sophisticated as we are today, we knew that we were going to have to follow up with clients. We knew that we were going to have to be just that much better because we were online and we didn't have those introductory relationships and community referrals. People didn't know who we are. And I think for a lot of mortgage agents, if you're listening and you're hearing that, when you're early in that journey and people don't know who you are, that's the time when you can actually invest all the time in figuring out your database. Don't wait until you're overly busy and have a booming business to try to figure that thing out, because you won't have the time then. So start, build the habits early. I think that's so important. That's well said.
An interesting sort of side note is someone I've talked to brokers and they sort of talk about how they're experimenting with online lead generation and, talking about it. And use another analogy here, which is like any kind of lead buy performance marketing. It's very analogous to the stock market, which is to say that like the average person could come in and like potentially like, make a few bucks, but on average, it's probably potentially a losing game. Think about who's on the other side of that auction. It's typically in the case of public markets.
Yeah, if you want to sell a stock, somebody has to buy it, right?
Exactly. Dedicated investment professionals with massive data models, more access to management, increasingly use AI. Similarly, when it comes to lead purchases, there's a tremendous amount of sophistication. And the reason that we do that is not necessarily because it's the easiest, it's because it's scalable. And we're trying to build it because it's scalable. For most mortgage brokers, they're not looking for massive scale. They are looking to build a great business with them or maybe with a handful of people. Where they have an advantage is in building relationships with people in the community. That is not somewhere we can compete. So going back to the CRM idea, rather than sort of like trying to temporarily wade into this gladiatorial arena that is like a Facebook or a Google ad auction, actually just avoid that for the most part. Obviously, there's certain places where it could just make a lot of sense, but like play where you actually have a tremendous advantage, which is in the community. Use the CRM, follow up with people, have the coffees, attend the fundraisers, all that kind of stuff that we just can't really do effectively. And so CRM is like a great way to effectively scale someone's ability to create and follow up and maintain relationships. And I think it's just so important.
Yeah, I like that. Don't be an options trader on margin.
Right. Off the side of your desk.
Off the side of your desk, playing against the best in the world. You probably want to buy, an ETF or a mutual fund or something like that, and like build a steady business that grows the right way. I appreciate that. So you've done some really cool things. You talked about in the beginning some of the like work experience, life experience that you have. You, like most of us, just sort of found your way into the mortgage industry. It's probably not that thing you were thinking about doing when you were 5 years old. Like you didn't put like your little suit jacket on, like I'm going to go be a mortgage broker someday. But you found yourself here enjoying the ride, I presume. And I guess I could say I know because we get to go on this ride every day. But what drives and motivates you now in this adopted industry that you have and in this stage of your life?
I would say the thing that probably motivates me most is just making an impact. And that really transcends a lot of areas. I mean, it could be making an impact on the very particular conversation that we're having, trying to find an edge, a way to think about something, bring some of my experience. I think about making an impact on the lives of our clients, which we do every day. We hear some amazing stories from our team that talk to clients, and people that we've helped that just had no hope, that got no's from everyone, and we sort of dug in and found them a solution. Seeing the impact that we've had on the lives of our team members, people that have built careers, bought homes, potentially met their spouse, things like that start to happen that are really rewarding. And then increasingly the impact that we're having on our communities, on our families, that to me is what really motivates me and what I find the most rewarding. And of course, I think with time and success, things that we have the privilege of making an impact on start to grow. I think as we sort of talked about, Canada's got some major challenges around housing and affordability, and us as mortgage professionals are a very key element of that. I don't think you can solve it necessarily with more mortgage, but certainly I think there's collaboration with whether it be builders or the government on setting policy that can happen. I think as our stature and our impact grows, our ability to influence those types of decisions grow as well. And what's interesting about Canada, I think there's a few industries that we really punch above our weight in globally. One of them is obviously mining or oil and gas, but another one I think is finance, like without a doubt, whether it be the banks or whether it be the pension funds or insurance companies. These are global players in a way that most of the industries are not. And I think it's on us as entrepreneurs to make sure that this next generation of financial professional is not left behind, that we are bringing financial technology and innovation to this space, partially by trying to disrupt our own international champions right here at home. Because without that pressure, they just might not adapt as quickly. And so influencing things like open banking, legislation, competition, proving what can be done, driving that outcome. And so I think whatever role people are in, whatever industry, I think that ability to feel like you're making an impact on your industry, your team, your community, I think is all really, really rewarding for everyone, especially myself.
Yeah, that's awesome. I was going to end by asking you what your lasting impact to be, but I think I might have just heard it. But if I could just take a moment to go a little bit deeper there, because I think your point is really important, which is to say that like Canada has had an incredible finance industry. We've been on an awesome 100-year run. Our banks are primarily viewed to be stable. I think people feel safe putting their money into this economy. I mean, it was really felt through the real estate industry for sure. When you think about all the, international money that flowed in to real estate, so much so that we, started to put some guardrails around it because people felt really comfortable putting their money in to Canada. But at the same time, we are also seeing probably a drop in innovation over the last couple of decades and starting to get behind some of our peers. I think some people are saying some good things in the space right now, but I think we have a lot of innovation to be done in Canada. We certainly see ourselves as one of the players who can help push this industry forward. But what do you think needs to happen from a more broad perspective? Is it cultural? Is it regulatory? Like, what's holding such a really innovative culture away from innovating in the finance industry and getting consumers the things that they want and need?
Well, you're asking me for my free advice. You're going to get about that much value from it, I think. So I'll sort of caveat that up front. From my perspective, I do think that regulation is a big part of it, which is to say that the state that we're in right now, with a certain precariousness of debt service, mortgage levels, housing prices, I think makes it actually very risky for a regulator to allow risk to happen. So I think that, for example, OSFI is the banking regulator, meaning really well, Canadians are trying to protect the banks from disruption, inevitably leads to less disruption, which is great for stability. But in some ways, that's a short-term win. It is not a long-term win. I think that for as much as we as Canadians like to kind of look across the border and sort of gloat in some ways about the things that we do better, sometimes I think they're quite short-sighted. I think that we sort of really pride ourselves on not having had a 2008 GFC. And certainly that was very disruptive and very painful for a lot of people. But the consequence now in the US, 14 years later, is one where there's much less debt among households. Houses are way more affordable. You've got a sort of vibrant banking system. And so while Canada's avoided that, it's kind of like almost been like a game of Jenga that's just been going on for a long time, rather than just having sometimes, getting the opportunity to rebuild. So I think regulation is a part of it, but I think that in order to give regulators the breathing room to be able to kind of loosen the restraints and not have to fear stability, you kind of need to have some stability in the sense of like, we need to bring down housing prices. We need to bring down levels of debt and not have this sort of ever escalating level of people always trying to maximize what they can buy. So I think it's a combination of those things. That's where I think these are long-term challenges that need to be attacked in multiple ways. But I think everyone agrees that long-term disruption and innovation are not just nice to have, they are a necessity to have a long-term thriving industry. And I think that we need to create the environment politically, economically, like from a regulatory perspective, to enable that disruption to be just the right amount of painful.
Even if we just, break a few things along the ways.
Exactly. Yeah, you want to be mildly broken and injured, but not so much so that it causes sort of tremendous upheaval and ultimately kind of hurts your long-term trajectory.
Yeah. I think about it in the context of a startup, right? Like, so the attitude we show up with every day, just like, accept some of those smaller things being broken means you're moving fast enough to actually innovate and create change.
Yeah.
So I very much appreciate that we've, been able to put a small dent. And I think, we've got big ideas of some things that we want to achieve.
Yeah.
So I'll leave it there because I think I've got an answer as to what you want to help this industry and this world achieve. I do want to thank you for your partnership, for your leadership, for your friendship with me here at Rocket over the last 4.5 years, helping build this. We have an incredible team that we've been able to build over this period, and you've had an amazing impact on that. So as I think about impact, you've certainly made a big one on myself as well as his team. So thank you for taking the time to speak with me, and thank you for everything.
It's very kind of you to say. Right back at you. It's been a pleasure, and congrats on launching this pod. I'll be listening to every episode.
Appreciate it. Thank you.